Check, check, check. I think you can hear me. Steven, are you on?
Yep, I'm here.
All right, hopefully they can hear you. I believe so. I'll just turn. Oh, Jesse's there. What's up, man? Hey, Steven, say something, and then Jesse, tell us if it echoes.
Jesse, can you hear me?
Want to know, is it echo?
Am I echoing?
So, two different things right there.
I cannot hear Jesse, by the way.
No, I don't know how to make. I don't know how to make YouTube do like a joint stream. But is he echoing? Second time or first time? I love the YouTube lag. It's amazing. Oh well. Anyways, so I'm just going to kick this off. I got a couple trades we're kind of managing. What? Twitter. Goodness. All right. Just if you're new or you're watching this as a recording, every Monday we go over what is called. Oh, I'm gonna have to close this. Every Monday we go over basically the plan for the week, and so what we're gonna do is we're just gonna walk through mostly the major economic data points that we need to be aware of as we're trading the week, how they could affect the markets and things like that. If you're trying to be a professional trader or professional anything, pretty much any company is always going to have a Monday morning meeting, and this is essentially ours. So that said, I just got to run through a quick disclaimer, but before we get started, just need to point out this is, you can read this, but you should carefully consider whether trading is suitable for you considering your circumstances, knowledge, and financial resources. Options are not for everyone. We are an options trading group, and you may lose all or more of your initial investment, so careful. Read characteristics and risks of standardized options that can be found here at 1888 Options before you start trading. Cool. All right, so that said, quick recap. It's a little off center there. But last week, what we'll do is we'll go through what were the major things last week that hit the markets. And really, there are a couple of funny ones to me. It's like there was a handful of Russia headlines. Really, like, they're like, oh, okay, well, constructive talks, and that was good, and then that whole move was completely pulled back, basically, because nobody believes what comes out of Russia anyways. The biggest thing in the news right now is that 210 yield inversion. We can kind of take a look at that later today at when we start going over the sectors here. We did get jolts out last week, so that was 11.22. I think really this whole inflation situation, it's people get confused, does printing money create inflation? Actually, no, not necessarily, not really. What happens is if people spend money, then prices stay high or go higher, right? Like if you owned a business and you're getting customers and they're spending money with you, are you going to raise your prices? No, you're probably going to increase your prices. That is inflation. So when we look at things in the data points, right, we want to look at things like core consumer price index, CPI. So this is like how much are they spending. Core is not including the important stuff like food and oil, which we know are like the bulk of inflation. Personally, is like the bulk of inflation. In the main numbers, they'll look at things like housing and cars. That's actually what makes up the major numbers that the Fed looks at. We did have ADP, so I think jobs, we got non-farm payrolls also. That's down here to the bottom. Non-farm payrolls is like how many new jobs are created. Actually, this is like 12 months or something since the pandemic. 12 months in a row, like over 400,000 jobs. And it's not necessarily that they're creating new jobs. It's more like, well, people are going back to their jobs. So job numbers specifically aren't really moving markets as much as they used to. At least, it's just clear, okay, people are going back to work. A lot of stuff about oil in the news. So there was headlines about Biden tapping the SPR, Strategic Petroleum Reserves. at about 1 million barrels daily. In total, 180 million barrels over the next 6 months, which I think was definitely like the biggest withdrawal, if you will, from that reserve. But at the same time, it's like, well, the U.S. actually uses, it was like 65 million barrels of oil per day. So for us, it doesn't actually do a whole lot. 180 million barrels over the course of 6 months, I think, is like it's like a couple days of the global oil use consumption. But when we do this, we're looking for things like OPEC to follow suit. And what was clear is that, well, they're not. So they didn't change any of their production plans. Nobody's producing differently. And Biden's really like, it's all about helping out the consumer, U.S. consumer, and like lowering our costs of daily living. But the rest of the world isn't really worried about that. So that's there you have it. In terms of the inflation numbers, I think we're like six. I don't know. We're way high. The Fed's goal is 2.5%, I believe, inflation. We're nowhere close to that. And so what's going to be in the news right now is a lot of rate hikes. So remember, we're talking about if the consumers are spending more, or they're continuing to spend, then no one's going to lower their prices, right? Inflation is all about, can you lower the prices? So for example, housing, right? So if housing prices are still going up, which we know that they technically are, how would you slow the speed of housing sales? Well, you increase interest rates. Higher rates basically will, I mean, my mortgage rate is going to be the biggest determining factor on whether or not you're going to buy a house or a car. So that's how the Fed controls spending. That's their tool, at least. To be fair, they only control their own rates. They don't control the entire bond market or interest rate market or anything like that. So they're more or less a gauge, and they're like the biggest player in town. So they want everybody to follow them. Doesn't mean that they're going to. And my mouse loves to do that. So moving forward, so those are the biggest headlines that we want to be aware of when we're watching the data as it's coming out. Inflation, jobs not so much, anything to do with Russia, anything to do with oil. Those are going to be moving the markets considerably. So we actually closed out all of the Dow 30 components. 26 companies reported and beat, 4 did not. We actually already got one last week, which was Walgreens, and they beat. So I don't have any coming up this week, but that does mean the earnings season is coming towards the end of the month. So that'll be a big deal. If you're an options trader or you trade with us, then that's like our playoffs, and we can make the majority of our money in a very short period of time with some very quick strategic trades. And we'll have a program that goes over all that. That you can sign up for if you'd like. So moving forward through the week, today we got factory orders, not really a big thing. Tomorrow we do have balance of trade, which typically doesn't move a whole lot of markets, but this is going to be really a focus on how much are we importing, we exporting, are we able to be self-reliant, really. The biggest day of the week, 100% biggest day of the week, everybody watch out for FOMC minutes. This is an absolute market moving event every single time that we see it. We'll pull back the charts, tie it to some probably the non-farm payroll release last Friday, and create some levels moving forward. Thursday, we do have jobless claims, a little bit lighter day, and then Friday, wholesale inventory. So I'm going to start walking through this, and I'm rushing a little bit just because I don't want to tie up too much of our time, and we'll get through to the charts shortly here. But this is today, so we'll have, as I go through this, I'm just going to have some of these important numbers here for that day. Times on the left are all in Pacific Standard Time, so adjust if you're Eastern, right? So 6 a.m. my time Pacific would be 9 a.m. Eastern, etc. On the right, we will see previous and consensus. So Monday, we do this a little bit later in the day, so I actually do have actual numbers for Monday. When we look at the numbers moving forward through the week, just be aware that consensus numbers will, when things are beat, miss, whatever, like if you're looking at earnings. Consensus numbers mean what the market has already priced in. So if anything comes in at consensus, well, that's not going to be market moving. Even if it's significantly higher or lower than the previous number, what matters is the consensus number. So if it's completely different than the consensus, then that may move markets depending on how much, and so forth. So when you look at these this is Tuesday, so your balance of trade super early for me, 4:30 my time, 7:30 Eastern. This is going to be a report that's all of the imports versus exports for the U.S. and this is more to do with like GDP, things like that. Right now, we are at negative 89.7, which means that we are a net importer. Don't be alarmed. The U.S. is always a net importer. We're not. We really. I don't think I've ever seen us be a net exporter. But consensus is that that will start to slow or like slowly start to reverse. Hopefully, we can be a little bit more self-reliant. S&P Global Composite. This is PMI, producers. Oh my God, manufacturing index, PMI. Wow, I'm spacing on that. Do you remember what that is, Steven? PMI is, wow.
Oh my God. What,
I know. Manufacturing index. So anyways, manufacturing index, anything over 60 is super high growth. Anything over 50 is solid, stable growth. So we're still in between 50 and 60, also on ISM manufacturing PMI. So what I do see though, so remember Wednesday, biggest economic data day of the week, just the FOMC minutes. Tuesday we get all of a sudden 4 Fed speeches and they start pretty early. I think Tuesday, so I got at 6 a.m. like right out of the gate, market open, we get Fed Governor Kashkari and Brainerd, those two pretty outspoken Fed governors that start speaking. So they actually, and Brainerd later on in the day, like an hour after that. So those guys can move markets. They're not like Powell, but people listen. So what I can say is that if you went into the recap, and I'll just ting this here. So when the Fed governors are talking, most of them, the sentiment has been that they're not confident in what they're calling a soft landing. So a handful of them, I don't remember who it was. It was like Chicago Fed was talking about 50 basis point, 50 basis points is half of a point interest rate hike, and the market, as far as I'm aware, really just expecting about a quarter point per meeting. But now we're starting to talk about half point move. And so if that happens, that's going to invert the curve more, and this, is seemingly a bullish market, could reverse pretty quickly. So we want to be super careful about that kind of stuff. Wednesday, we get a ton of oil numbers. So this is the petroleum status report, really, and I just broke it down into some of the major components. We'll get previous, they don't have a consensus on this, but you can see, okay, well, if we are drawing down 1 million a day, that's just know our reserves are actually considerably lessening, like being tapped pretty heavily, and we don't actually have like permits and things like that to refill them. So while we might in the short term be tapping strategic reserves, there's nobody that's going to tell you that that would actually be a long-term fix at all. So I don't. So if you got a 12 mile a gallon truck or something like that, like me, yeah, we're probably going to be in for it for quite a while. Be ready for your $100 fill-ups on a regular basis. But again, 10 a.m. Pacific, that's 1 p.m. Eastern, right after the lunch hour, we get the FOMC minutes release. So be careful Wednesday before lunch. So if you were a professional trader and you're going to lunch and you know that by the time you get back, there's going to be some major headlines, you're probably going to be closing on a lot of positions. So expect a little craziness on Wednesday before lunch. So After that, then it'll kind of settle out, and Thursday we come into initial jobless claims. Again, not really moving markets right now. I think continuing claims are different. This is like unemployment insurance, so how many people are still trying to claim benefits and things like that. That's going down, and initial like new claims around 200,000 is perfectly fine. So Thursday, so we get 4 Fed speeches Tuesday, we get FOMC minutes Wednesday, and we get Bullard again Thursday, and 1, 2, 3 more Fed speeches Thursday. So 4 speeches, FOMC minutes, 4 more speeches. I think there's something going on. I don't know. But there's some kind of communication plan that's clearly going on. Consumer credit change. So how much are we carrying? So we do want to see this go down. We'll see how that goes. But just a number to be aware of. Not really market moving right now. And I didn't have the earnings number. Friday is pretty much a nothing burger day, actually. So Friday we get wholesale numbers, wholesale inventories. That's like, I don't know if it's actually, are they stocking up or are we not buying as much as consumers? But it's just, this is their inventory report. WASD is like the agricultural report. So if you are looking at things like MOS or that kind of stuff, like wheat prices, this report actually could move that market quite a bit. And then again, Baker Hughes count on Friday as always. So that's it for the week. Again, Tuesday we start getting prepped for what's going to happen on Thursday, and then Friday we get more speeches, probably trying to calm us down in the market for whatever they say, whatever comes out. They're not saying anything. It's just the notes. It's the notes of the last FOMC minute meeting, not an actual meeting. And then I will be sending out. So this Thursday we will go over some of our earnings trading systems. So this is the actual trading system. We'll go over in general Thursday, not this system, but how to start, what to look at for trading when you're looking at earnings, since earnings season is coming up, and we'll give you guys a little bit of a helping hand in that regard. So I think that said, I'm just gonna close this out and jump into some of the charts. I think first thing is first, right? So we always want to do a sector check. I'll typically start out on 30-minute bars if I'm looking at general sectors, and you want to have this view right here. So S&P, the Qs, DI is we call the diamonds, and your mid-cap index or Russell. So number one most influential index of the group, this is tech heavy, and this is industrials. And this guy is like the black sheep of the family, does whatever it wants, whenever it wants. It doesn't follow suit. If we want to get a good trend, though, we want to see all of these 3 major markets trending in the same direction. And so, for example, this Friday, let's do this. So Friday so this is Monday. This is Friday. Friday's open. We got non-farm payrolls Friday morning. Is that right? I believe so.
NFP was last Friday?
Yeah.
Yeah.
So I'm just going to mark this real quick. So non-farm payrolls is a fundamental event that will typically create a technical level. And this white line happens to be an automated line. I can take these off for right now. But this is going to be a critical level. So what I can say is that non-farm payrolls came out good. We did some major revisions actually to the prior reports that were revised up, so even better. What you can take from that, though, is like, remember, if the economy's doing better, then spending is probably not going to be slowing down. And so what does that mean for the Fed's response to interest rates? Well, it probably means they're going to have to be a little bit more aggressive. So this is going to be a critical level right now. Honestly, I'm a little suspect of this move, but technically, if you would go along here and then probably up to this orange box is prior week, or the average length of an average week. I don't think I don't think I could see this going to new highs right now. Do you have levels on the S&P, Steven, on your end? I have something around like this kind of pivot right here. What is that? 445 uh, for potential.
Yeah.
If
To the
this,
upside,
yeah,
like immediately, like today I have 456.50,
yeah,
which there was a double top a couple weeks ago there. And we were kind of playing around that level last week. Further up to the upside, I have 462.
that's right here, 456. So a double bottom right here.
Last week's
Boom, boom.
high, yeah. And then 450 was huge last week. We'll see how it holds up this week. I'm looking at least to get back to 460, 462 this week before looking at something stronger to the downside. Obviously, unless we're kind of slowing down. So if it breaks back down towards 450, I'll look to get short from there. But
Yeah,
right now I'm in some 460 calls.
yeah. So oh, look at you. So what date would that be if you were going
Those are
long?
for Friday.
So if I'm trading SPY, 460 calls, that would be Friday the 8th. Oh, yeah, not too far. 20,000 volume on that today. Oh, $100. Yeah, that's not bad. So what we say is that if you're trading technically, cool, this level broke. This is a good entry right here. On this candle, go long. First target 456.50, just like Steven's actually saying. So you have one, two, essentially almost three tags right there, right on that level.
Mm-hmm.
So that looks good for like first target, second target, and again, if I was trading this to go short, I would actually mark this level for. Steven's talking 460, so yeah, 459.50, give or take, right at this fail point. And this is the 30th, March 30th, where that was Wednesday. So Thursday, yes, Thursday's close was the big breakdown here, and when we tagged this Wednesday bottom, so again, this 459.50 ish, yeah, level could be your resistance for sure. So first target, second target, and then potentially if you reverse, it would be somewhere around there. If you break that 462, yeah, you're very likely just going higher. If not, downside target I had like 445. If we break below this, would really be 451 at this point, or maybe 454, somewhere around there. Yeah. So for now, we've got this. Just trade the charts. If it goes any higher, cool, you can trade that one. For now.
Yep.
Then Wednesday, we'll see. Q's, man, these guys way stronger than the rest actually. So Q's probably a little bit further. So I mean, this is and I was looking at the charts. And we got the old guard, the old Fast and Furious stocks moving right now. So if we can get a pullback somewhere like this and a bounce, that would be ideal. If Hughes can make this kind of high, then yeah, I don't see why the SPY couldn't actually go with that theme for sure. And diamonds probably the weakest of the group. Typically, if industrials or if tech is going, industrials not going to be as strong. The biggest thing. Oh, I got all these indicators and stuff on here. Sorry. I'll move back to a clean chart. So that I don't see this happening. This is just like full-blown consolidation and then gone, right? We could do just a broadening range for sure. Remember looking at these charts and be like, oh, well, huge break way back here, and then we could probably find ourselves quickly right back to where we started.
Yeah.
Yeah, up to this. Yeah, that'd be amazing. But we got, so what is this, 200-day, 370 on Qs? Just something to be slightly mindful of. This was that broadening range on SPY. And these white dash lines are some of our fundamental events. So SPY breaking back above 200-day, bouncing right off of it. Look at that, 450. I like that. That looks good. Q's not so much, but this is yeah, this is gonna be a critical level. If they can reclaim this, what was this high? 370. Then you'd be a rocket ship. Regardless of that 210 spread that's been in the headlines. So what I would say about that is that the 210 spread, I do have this up. So inversion, 10-year over 2-year. Here's a 2-year. Can I compare? Which one is it? Holy. US. Is there like a clean I don't have a clean one. Two, 10-year. Yeah, I don't know. Crap, I know that there is a... I know that there's an easy fund. Oh well. I thought there was a chart that was like, hey, this is the 210 spread chart. Oh well. Anyways, so basically what it's saying is that the 10-year interest rates are lower than the 2-year interest rates. Do I have that right? God. So this chart. Man, I'll get this all situated for the next one. 2-year interest rate is remove 2.44%, 10-year at 2.41%. So they're close to even. If I find the chart, what I would show you is that actually, so the yield curve typically will invert, right? Meaning like the shorter dated interest rates are higher than the longer dated interest rates. So it's like why that's basically saying, oh yeah, the dollar is going to weaken long term. But it doesn't happen like the worry is, oh, that's the recession. But that doesn't happen right away. It takes like 6 months, maybe a year or even longer. So right now, we can trade, well, we'll always trade what the market gives us, but right now I wouldn't expect it to go like dump city all of a sudden. We will have a lot of the, like headline risk for sure, but I wouldn't be worried about, like recession today or anything like that. So that said, so Q's pushing up on the 200-day, SPY has reclaimed it, Diamonds at it, and IWM below. I think this mid-cap index, we could probably throw some iron condors on now. This is going to be range bound for a while. I did want to do one thing on gold. So we had GDX, have GDX positions, started closing them, and we're looking at, oh, this 38 resistance. I'll just go over here, which was right here. So 38 resistance right here. I think this pullback is expected, was expected, and so probably just a little range bound right now. Again, probably significantly more neutral trades for a while that I might be putting on that one. Just bullish to neutral. I don't expect that thing to be flying anywhere anytime soon. So if you guys have any specific stocks you want to take a look at, post them in there. I'm just going to walk through a quick hit list of some of the stocks that we're watching. Jesse, if you have anything, just type it in there. So I did have, oh, that's right. So those are major sectors. Then I go into subsectors. So we'll go into subsectors right after that. we do have a handful of things breaking out that we've been looking at. So remember, so major indices here. VIX low. VIX, if we can get below 18, then I might be looking at potential hedges somewhere around there. And then we go into subsectors. So with the Qs the strongest, that would be like your communications, things like that. And I can go to indexes. So I'll have a little list of indexes here. So strongest index for sure Qs. Then you have semis today. XLY, interesting. Okay, that's consumer discretionary, which was getting beat up pretty bad this morning. Then solar, and XLK is tech. So semis, tech, or Qs, semis, and tech. Do I see anything else? GLD is actually up. Home builders, they've been beaten up pretty bad. We can take a look there. And no, I don't see anything that's super jumping out. So XPI was actually one on my list. That is the health, like biotech sector. So one thing. So typically, if you get into a subsector that's kind of basing, you might want to pull this back and kind of dissect the ETF itself and see, oh, what's the strongest candidate in this sector? And I think it was, I remember how we got to Bristol Myers. But man, that stupid stock. I was looking at this like, oh crap. So again, this morning, kind of tagging new highs, just pulling back slightly. I might be looking here. I checked out the chain this morning. I really didn't see anything that was that had that great of spreads, to be fair. So, but this kind of reentry right around 74, pushing back to highs. This is like super. I mean, more all-time high after all-time high after all-time high. That thing's flying right now. So other things that are in the XBI you can kind of take a look at. Probably Pfizer. Semis, I know you had a couple on the list, right? So let's look at, so semis, we go NVIDIA and we go AMD pretty much always. And so this view multi-time frame, so top is the shortest term, 15 minute intraday. On the bottom left here, we start monthly, then we go weekly, daily, and then you can go 1 hour. So this is just quick view. These lines, purple lines monthly, yellow lines weekly, white lines here, prior day, high low. Just kind of automated. So NVIDIA would have been a nice catch this morning, bouncing up off the close. Now we're tagging yesterday's high. If we can break through here, ooh, that looks pretty bullish, dude.
I agree.
That would be straight to 290. Do we have anything? Yeah, so this purple line, that's that prior month high. Tags right over here at that wick right after last week. And if I did pull this back, yeah, then you could be pushing. But that's going to be a pretty big resistance level. So 290, I'd be taking profits, no question. And then wait for it to break, retest to decide what I want to do after that. But this level breaks. This is 275. We are literally sitting on it. Well, not literally. We tagged it. Looks like early. Then again, now we're going for a third. Might be failing. Ooh, high and tight, man. If that breaks, though, that's going to be a big one. That's an easy day trade. Well, I say easy. That's a nice day trade. Wait for that break, though. AMD, super similar. Actually, probably a little cleaner setup, right? I got this. This is yesterday's pivot, or Friday's pivot, right here, that we broke, kind of pushed through, coming back down to retest and base. It's not horrible. Inside week so far. Here's last week. And starting off an inside month. So, do you have levels here on this guy right now, Steven?
I do not have any updated levels.
Yeah. I mean, the biggest critical level that I can see is right around 110. Right, so you got this little pivot here. It's about 110. Right, breakdown Thursday. If we can't reclaim that 110, I can't really be bullish. But if we do reclaim this, yeah, 115 plus quickly. If you pull this back, though, we do have this big old downtrend, and this this pattern, this kind of breakout situation. So here's your base, 102. This little green hash line broke out once here, broke out another time here. Whenever you see like the first breakout, typically a fade, just like this, breakout, fade, and then comes back down to retest. And so we're looking to do the same. But that was a big breakout, fade, come back down to retest. Yeah, anything around this, and then I call this the Triceratop pattern for sure. Where's my drawing tools? I don't have it. Anyways, you get this like big hump, and then if you can catch that, there's your trade. This one's a big one. I don't know if it's going to be anything like that, but we're just playing around. But that said, you get that like consolidation break. Now we get this retest. Now we're really starting to look to see, can we get a potential trade start to form. Real support right around 103 right now. Seems far away, but this thing is a crazy mover. Inside day, yeah, over 111.32 is what I got. 111.32. All right, God, Twitter. I'm just gonna take a look at this. So big headlines. Yeah, at this point we are looking to test those pre-market highs on the hourly. This looks like it's gone. It looks gone, man. I don't know what to say.
Unfortunately.
Yeah, we're about to hit this ADR, so if you're long calls here, let's see. Take a look. These are scalping plays. So, long calls, 55s. God, is it really? Why is it? Oh, okay, so there's only every $5 there's strikes. That's tough. Yeah, 150,000 volume on the 50s this morning. 65,000 on the 55s, trading for about $1 here. Let's see. Oh yeah, these things are already way overvalued, but doesn't mean that they're not about to be more expensive. Yeah, what? Oh God, 106 was the high end day on the contract. 68 looks like the pivot low. But yeah, these little green dots here for me, that's 14-day average range. So when a stock moves outside the average daily range, then the options pricing model actually will adjust on the contracts, and the IV, not the price, the volatility, and therefore the price of the options will actually go up because they're having to adjust for a larger standard move. So if this were to break, then those options would probably get like 10-20% just increase, poof, on a couple cent move if this were to go through here. That's why we have them. But you should know that the closer this is, the more expensive it is. If you go along here and you are wrong, yeah, it's going to be like, boom, $70, 30% loss, gone, just like that. Man, my TSM failed. Failing. 105. What do we got? I had, let's take a look at Square. So Square was basing high this morning. So again, same thing, this prior breakout level, I can take this volume profile off. Oops. Yeah, we had 138. Once that broke this morning, that was a strong break actually. Now it's coming back to retest. Actually testing that upper pivot. That still looks strong to me. And this is what I was talking about. This is the old guard. So is this pretty far out of the standard range? Yeah, so careful. Very much Very, very much expensive, like inflated contracts. This is the daily, so I got 1, 2 reversal setup going straight. Looks like to 147, 150. Might be a layup. Actually, yeah, that does look like a layup to me. Yeah, we're basing here. I like those. What's that look at? SQ. This week contracts, yeah, 145s with 2700 volume, even the 150s with 2850 volume. Probably 145, 150 debit spread is what I would do. If you're day trading, you could choose either one of those, but those are your main contracts. Outside Roblox hitting the tape. Oh yeah, Roblox. Tagging this upper ADR, just gone. Everything that I was like, this is, I don't trade Monday mornings, but man, just because Ivy is so crazy, this is a crazy looking little setup here. Interesting, interesting, interesting. Don't know what to say about this. I probably shouldn't say anything about that because that's just shenanigans. But hey, you know, it is what it is. You got a pretty clear downtrend, broken, right? First break, doesn't usually take, pulls back a little bit, and yeah, if you weren't watching like me, you probably didn't snag this just beautiful tag on that last pivot. Swing high right there, 45. Unfortunate. Just looks like it's crossing over MACD too. Yikes. Could be a pullback to like just under 50, 49. Let me see. That'd be swing setup. Swing setup. If I want to swing something, is Ivy high? No, it's not too high. So April 8th, 50s, super heavy. We got 50s, 60s, 50s and 60s. Yeah, all short term, short dated. 50s, 55s, and 60s. So just play it one candle at a time. Give it a bit to breathe. What else? Here. I'll just go quick. Just checking on one of our stock positions. I can't believe how strong this stupid thing is. If there was volume on contract on options, that would be amazing. But we snagged this here. Nothing. Just like not going higher, not going lower. So sticking with security infosec. Steven, you said you want to take a look at crowd. Very similar. Off this base, look at that. If you had snagged crowd at 160, that would be amazing.
That would have been huge.
Yeah. So prior week high 232. Also the 200-day. So something to watch out for. You're getting on the daily, so candles are kind of compressing, right? So this means two things. Either you get like an outside day, like this candle right here. So this is called an outside day, outside candle, that typically signifies a trend reversal. Either if it's going up and you get one of those, then it's likely to go down. In this case, if it's going down, right, and you get one of those, craziness, that's also typically what you'll see. So these are pretty frequent, and we're looking for that. On the other side, flip side, you have what's called inside day, which is exactly what this is. Super tight, not going nowhere, don't know what to do. It's these kind of flat candles, right? Flat, also indicative typically of trend reversals. So be weary of that kind of stuff. Or continuations, right? But it just pause, wait. So here at this point, what are we looking for? At this point, we are looking for a break, probably over 232. Is that your number?
Mm-hmm. Yep.
232. Let's do this. 232 on crowd.
And then, yeah, 232 the upside. If it breaks below 224-ish, you can wait for a quick pullback, I think.
So that's just essentially,
I would be looking at it.
Yeah, if you take Friday's range, and that's really just the prior day range, right? So if there's going to be a reversal of any flavor, right, it needs to break the prior trading day's range. So in this case, if it's inside that range, you don't really want to trade it, but if it goes above, right, it'll be a break. and head up that way, or it'll be a break retest and go back down this way. We don't know. We don't care. We trade both sides. If it does break to the upside, you are. I'm going to pull this back. Yeah, you're going to tag this kind of support, which would give you a target right around 250, 247. So, and you're just going trading from one support or supply, right? Supply demand kind of zone. So, resistance, support. Resistance is supply, support is demand. 250 would be your next target, and then if you can clear that, 265 doesn't look like a whole lot, but it is, and then for like gap fill to 285. But yeah, this would be a big level, no doubt. So definitely something to watch. If it breaks, that might be fast and furious, because that's just plain as day. So we're probably not the only ones looking at that. Here, I'll just do a quick filter on here on the list. God, penny street. What the hell? Oh, this thing's way oversold. So this is just penny stock now, but an example of if it breaks a level, it usually breaks with strength on volume. Looks like that. Yeah, Twitter's going. God.
Oh, of course.
Damn. So nasty. I feel bad for our buddy. I don't know how many. Oh, okay. Fisker, EV play. Interesting. That looks interesting. I mean, over prior week levels. Is this right? No. Let me delete some of these lines. I'm gonna keep that one. Dun, dun. Oh yeah. So Fisker not over prior month. 1366. That is a breakout level, but I got a 1477 resistance here. Yeah. You'd have to wait for that to clear to take this to the next one, but that's going to be a big one for sure. It's a big day for Fisker. Must be an EV thing. What are we doing? EV, so Lucid, not the same. So maybe it's a headline thing. We'll see. Actually, Lucid doesn't look that bad here. Yeah, if Lucid could follow suit, it would just be a sympathy play, but 25.55, break above that. Yeah, straight to 28 is your next target. And again, Lucid, you'll have this very massive kind of like broadening range forming from here, and then you would probably just take this. I don't want to take all the way that, but it could be. Never know. I think that, yeah, Datadog was like, oh god. So this one, the old tech regime, Datadog, looking strong. Again, we just want to wait till they all break. So 150, call it 160 break on Datadog is going to be pretty big, straight to 168. Unity was, oh, dude, this was yours. She gone.
Yeah.
Unity gone. So at this point, 108.70. So this high, if that breaks, oh yeah, that'd be super strong. You could trade, but realistic day trading, yeah, just go to the next levels. So tech looks strong right now. I would just be wary of Wednesday as like FOMC minutes come out. Mondays are typically like super strong. And I just want to do one more. I have this opening trade. So Starbucks, I did not close anything here. I'm still good to go. If you have the spread that I have, I'm actually probably going to close. I'll send a note, but I'm probably going to close out the short strikes because they are essentially have already served their purpose, but no longer serving any protection. Prior week low here. This is a good technical, like probability level. If you're buying on support, right around here. Starbucks is a headline thing right now. Just is what it is. So old CEO coming back. We'll see how the market digests it. Oh, I did want to do one other thing. So TLT, this is your long bond. Rates going down. We're hitting this 130 level. So I think FOMC Wednesday and a ton of Fed presidents probably talking about rates. This might be an easy layup. Nobody's going to be telling you that rates are going up. So this is inverse relation to interest rates themselves. Average weeks range right here, probably straight down to 126. I mean, 130, 125 debit spread could just be just a nice little layup here. Let's see. I want to see a break. Yeah, that takes us down to right in this range. Easy money. We shall see. As long as it's not too oversold right now. That's all I got. Cool. I think we're good. And if anybody has any questions, just add us in your server and we will get back to you. So, adios. Check you later. Bye.